What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new brokerage account today. Go get that free stock. Go get that free money. Is this another 2008 bank bailout? It certainly seems like that. Recently, the Fed announced that they would take care of all of the depositors for Silicon Valley Bank and Signature Bank. They would not lose any of their deposits. Now, they did not say that they were going to protect the executives or the shareholders of those two banks. They're going to be left out in the cold. I'm so glad, though, that the Fed stepped in and said that they were going to protect depositors. We also got some news from around the globe that Credit Suisse, a very large bank in Europe, was in trouble as well. And the Swiss National Bank came to the rescue. They gave them a $54 billion loan in order to stay afloat, service debt, until they could get themselves back in order. Why are these banks being bailed out? The reason they're being bailed out, guys, is because we cannot afford in the global economy or the U.S. economy for consumers to be afraid to put their money in the bank. We already have inflation at 6%. We already have the stock market in turmoil, not just in the United States, but around the globe. And we cannot afford financially for people to be afraid to put their money in the bank. So yes, you're going to see the Fed step in and backstop depositors if some of these regional banks get into trouble, just like Silicon Valley Bank did and Signature Bank did. And just like Credit Suisse, European Central Bank has a decision to make, though. Are they going to increase short-term interest rates at their next meeting? The Federal Reserve Central Bank of the United States has a decision to make in their March 21st and 22nd Fed meeting. Do they increase short-term interest rates and continue their fight against high inflation? I think they don't, guys, because you really have to get some financial stability back in the United States and globally. And increasing short-term interest rates too fast after all this banking failures is too much. They need to put a pause on rate hikes, at least until the third quarter, at least until June of this year. And then at that point, if inflation is still stubborn and still too high, resume the rate hikes. But at least let our economy somewhat heal from all of this bank failures we've experienced over the last couple of weeks. Not just here in the United States, but globally, right? What we have to do, though, as investors, is take a look at what's happening in our country. Take a look at what's happening in our economy. Take a look at what's happening in our stock market. Take a look at what's happening in our real estate market. And we got to start taking our hard-earned money that we've been tucking away, and we got to start investing that money in opportunities that poke their head out of the sand and say, hey, I can make you some money. We need to start making investments in those type of opportunities. And the easiest one for me is the stock market, because I don't have to do very much. All I got to do is get my money together and make a commitment that I'm going to dollar cost average in to ETFs that track the S&P 500 and the total stock market. And if I do want to invest in some individual stocks, I just need to make sure they're blue chip individual stocks, and the company who I'm buying those shares from, I got to make sure that company is going to be here tomorrow. So it got to be companies, guys, that will prosper in this type of environment. Companies like Walmart, right? They're going to prosper in this type of environment. Why? Because they offer goods and services at a discounted price somewhat, right? And most people in America who are having a hard time with escalating prices of goods and services, they're going to seek out places where they can get discount prices at. And Walmart is one of the leaders in that. Now, I'm not telling you to go out and invest in Walmart stock. I'm just telling you, if you're looking for a place to put your money, if you're trying to do individual stocks, Walmart may not be a bad place to start, right? Any type of retailer out there who has a retail operation that can sell products and services at a discount, guys, those are the ones I would say, if you're picking individual stocks, you want to think about. But for me, though, it's going to be ETFs that track the S&P and the total stock market. Because, see, I don't want to be the expert out here trying to pick individual stocks. Need to know too much to do that. I don't want to pick winners and losers. I want to pick passive investments that have a proven historical track record of building wealth and multiplying money. And I can't go wrong, like I said, with ETFs that track the S&P 500 and the total stock market. If you're thinking about real estate, again, man, I don't think it's a bad time to buy real estate if you're buying it for investment and you can demonstrate that that property can make you money. I don't care what the interest rate is. I don't care what the purchase price is. If you can make money on that property, given that rates are a little bit higher, given that you're probably paying a little bit of a premium to purchase the property, if the rental income still supports it and you can still pay your expenses with that rental income and put money in your pocket and expect to get appreciated value on that property over the next 3 to 5, 10 years, then what are you waiting on? Go buy it. A lot of people are running around here with real estate and thinking, oh, I can't buy real estate, it's too... No, you're missing the whole point. If you're buying real estate to build wealth, as long as that rental income will support paying for the expenses of the property, and you can realize a profit in your pocket every month, and you've bought it in a good location that has demonstrated properties will go up in value from a historical standpoint when they're in this location, then what are you waiting on? Buy the property. So don't sit around and make excuses for not investing in building wealth right now, guys. Yes, we're in a bear market in the stock market, but guess what? That's the best time to buy in the stock market. That's the best time to buy paper assets when they're deeply discounted, especially if you have a long-term hold pattern. Listen, man, if I can buy Vanguard S&P 500 ETF, VOO, at $340 a share today. And in 10 years, it's trading at $440 a share. Guess what, guys? I just made myself $100 per share net worth gain. That's the beauty of buying assets when they're trading below what they historically have traded for, guys. You buy them low, you sell high. That's how you build wealth. There's no magical secret to it. There's no magical trick to it. You got to take your money and be willing to invest it in things that have a historical track record of building wealth. That's the key, historical track record. If it doesn't have a historical track record of building wealth, don't put your money in it. Let's get back to these banks and the bailout. Again, I think it's a good thing, at least here in the United States, that the Fed has stepped in and said, you know something, these two banks that have failed, we're going to cover all the depositors. I think it's also a good thing they're not covering these executives or the shareholders. Hey, you are on your own. But the depositors are the ones who, in my opinion, would be the victims. And it's nice to see that our government is stepping up and protecting those depositors of those two failed banks. Will more banks fail? Potentially. There could be more failures coming, guys, especially at the regional bank level. Because see, these regional banks are fighting very hard to try to be profitable. And sometimes in that fight to be profitable, they make bad investment decisions. Now, that investment decision 3 years ago might have been awesome. But as the economy is eroding, as interest rates are going up, that investment now may not be as good. And if it's a big investment, it could cripple and hurt a regional bank to the point where they got to close their doors. So be careful if you're with a regional bank. Only thing I can tell you is you got $250,000 FDIC insurance. Split that money up to make sure you're under that 250 cap. Whether you got to go to several different banks to do it, split it up, and then you can sleep at night because you know you're covered. Drop me some comments and let me know what you think about Credit Suisse being backstopped by Swiss National Bank to the tune of a $54 billion loan. And I'm sure it's a sweetheart loan too. Give me your thoughts on that down in the comment box. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today, man. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you in the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.